Okay, hello everybody, and welcome back to another video from the Investor Diary. In our last video, we explored identifying the trading range of the SMC methodology that I am adopting and adapting. And in the last video, I also mentioned the person and the YouTube channel from which I got the basis of this trading plan that I'm testing. You can go back to that video, and I will be linking to it here. And I won't be linking to it again in the description. I linked to it in the description in the last video, and in the article that I embedded that video in as well. So in this video, we are going to explore more and understand the trading range in a better way by better understanding what is inducement. Or I'm not going to explain what it is in conceptual terms. No, I'm going to explain how to identify an inducement. And if you want to explore more what is an inducement, it's one of in general and in brief, it is a liquidity area where smart money, SMC stands for smart money concepts, where smart money goes into certain areas in the market to obtain liquidity enough for its next move. So this is in brief. So inducement is one of those areas, but if you want to explore more, you can go either to that channel or just look for the term. So now let's start a new session. And before starting a new session, in the last session, we explored the cat GPY. I want to show you something now. Because in that session, I did not save. And this is when we were talking about, because this is the backtesting software that I told you about a couple of videos ago. So because now this moved, we started this at the last video from the 1st of January, which is around here. Okay. Yeah. 1st of January is a holiday anyway. So the 2nd of January. So this is the area where we started and the recording went, but all the lines that we drew and everything disappeared. Why? Because we did not save the layout. If you're using this software, you should save every time you do something different. So now we'll go back and we'll create a new session. And I need to remind you, this is the free version and I'm satisfied with the free version. I'm going to link, whenever I mention this platform or this software, I link back to it. Okay, so you can find the link in the description or in the article that I embed this video in. So let's this time go to the GBP, let's say. Okay, the GBP USD. This is not right. So the name is GBP USD, and we'll select the pair here, and we'll again go to the 1st of January just to give us enough time to move forward. Okay, so let's save it, and GBP USD, let's play. Now, as I was saying, this version is the free version. So when we're running this video, we will be interrupted by advertising. If you want to use this software and you want to get rid of it, I think it's easy and it's cheap as well. It's around maybe $3 to $5, if I remember correctly, per month. And if you want more features, it's more. I'm not sure of the price. I showed everything in that video a couple of videos ago. Anyway, so let's start. We want to identify the trading range, but now a very important part of identifying the range is the inducement. So we need to understand that part of the story. In the last video, we didn't get much into that. We mentioned it a couple of times, but we didn't discuss it in detail. So let's start with this area here. So this is the bottom here, and this bottom has been broken. Okay, so this is, and as I said, okay, I will not get hasty. I will deal with it as if I am actually trading. So this low is 25057, 25057. No, it's not the same. 25057, 25057. Okay. So it was broken here. I think this is 052. Yes, and the previous one is 06. So this is the number that we're looking at. Okay. So 052, that means it got broken here. And this is with a sweep. So if this, the direction, wait, this direction is, it's really horizontal. And it was going up. So this is a break of structure. Okay. This is an inducement here. We'll talk about inducement. And it's broken. So if this was a downward trend, so this is a break of structure upward, that means the last top is this. Okay. Let's take it from the beginning. The last top is here. So this is the high. And this high is okay, the last time it wasn't that fast. So okay, now normally it at the beginning of looking at a chart for the first time and setting it up, yes, it will take some time, but after that it becomes really fast. So look at this. I mean, I go through all the 28. Well, those are 27. One of the pairs, which is the USD. Okay, let's go. I'll continue with the other app. Okay. No. Okay, this is the high, 26.71. Okay, this is 0.72, 0.721. So this is the high of the range. And this is the low of the range. So this, was it broken? What is the low of this? Because if this was a break of structure, this low will remain. Okay. So this low is 25046 and this is 05. So this was not broken really. So the low really is this one. Okay, Control Z. Let's take it here. Let's remove this. It will be clear in a while. Just let's set it up. And it's 25046, 25046. Okay, so this is the low, and let's extend it, let's say to 450. Okay. Let's go further. $500. Why? Because I want to see if it was broken by those. No, it wasn't. Okay, so it holds. So, okay, let's start with this low. And we want to find the high of the range. Okay, so it wasn't broken. We want to find the high. So this is when we start looking for pullbacks. What do I mean by a pullback? Let's look at this height. Let's say the price is here. This is why I wanted the recording, but to for the viewer to understand what I'm talking about, it's better to start from here. But for the explanation to be clearer, we need to go by the where the price is going. It will become more understandable. But let's take it from this part. Okay, so when we want, if we identified the low and we want to identify the height, and you'll ask me, how did we originally identify the low? Even if we identified the low in a wrong way, or the range in the wrong way, the future will correct it. I mean, how the price, and you will see how. Okay, but let's say we identified the low here as this one, and we want now to check the high. We look at this high. Where is the pullback, the recent pullback? There is no recent pullback, therefore there is no valid pullback. And a valid pullback for this height, okay, needs to be a candle that went below the previous candle, and the previous candle was higher than its previous candle. For example, let's look at this. So and of course we're talking now about an upward trend. Why? Because we're looking for a high. If we have identified the low, that means we are looking for a high. And if we're looking for a high of the range, that means the trend is going up, the sentiment is up. It's an upward trending chart. So this candle has been broken by this candle, okay, and now this candle went below it. Now this is a drawback. Where does it end? It ends here. So this will be the pullback. And if this is the pullback, let's take let's lock it, okay. But this pullback is not for this height. This pullback is for this height, okay. And let's this height, the pullback, there is no pullback except this one. So the inducement will be at the external range, okay. And in this case, it's called major. Again, if you want more details about these things, go to the origin of the methodology, which is the YouTube the YouTube guy I told you about. But here I'm documenting my own journey and my own methodology, which is based on that person. Okay, so let's take this low, 25.52.3. And this will be the inducement, 52.3. Okay, so it wasn't hit. Let's change the color. So it wasn't hit by this candle, and it went upward. That means with this, it went up with this candle, but there is no hitting, okay. And then it wait a minute. So we have this height here, and this is a pullback. Which one is lower? 57 is the same. Normally I take the second one. So this one, okay. It's 52. If it is hit, if the inducement is hit, I'm not that meticulous about the exact number, because it's here, it's hit, it is very obvious, okay. So the height here is this one, this is the official, the valid high of the range. So this is the low, this is the high, and but this high has been broken. So this is, since this is the high and it has been broken, that means this is a break of structure. Because it is a break of structure and this is the break, then this is the retracement, and the lowest retracement is this. Therefore, this is the new low of the range, and we are going to look for a new high. And by that, we need to understand where is the next pullback. At the current time, the pullback, let's put the low. It's at 25.53.2. Okay. Now, currently, there is no valid pullback here for this height. And this is the high. So these did not break. So it's the same pullback. So currently, the inducement is at the external low. And it wasn't hit until the inducement is not hit, and this has not been broken. This height has not been broken yet. Okay, so it's been broken here without hitting the inducement. So now we will be looking for a pullback here. So this is the first pullback. Is there another one? Is there another one? Yes, there is this one here. Okay. Now this, remember, this is the low of the range. So this is a pullback. And there is no other one before this height. Okay. Now the trend went down and touched the inducement. Now in this case, this is a major inducement. Why? Because this inducement happened after the break. If the inducement happened before the break, it's minor. Only in one exception, if it is sitting on the low or on any external range, whether the chart is going up or down, if it is sitting here, it is a major inducement. In this case, when this is, if this was a minor, then the external range is the major inducement. Okay. This is why I don't take trades when the inducement is minor. So, but in this case, it is major inducement. It was hit. So now this is the height of the range and this is the low of the range. Now this low has been broken. Now, if this is the high of the range, and that means, and this was a break of structure upward, that means the trend is upward. If the lower range is the one that has been broken and the inducement is major, and this was broken by a sweep or a break, it doesn't matter. Even if it was a small sweep, okay, it will be considered as a change of character. Okay, so now, because this was broken, now this is a change of character. With the change of character, now since we are now going down, a change of character, that means we are shifting from bullish to bearish. Now, since we are shifting from bullish to bearish, the high stands. If the opposite was the case, if we are going from bearish to bullish, then the low stands. The low of the range stands and stays the same. In this case, we are going from bullish to bearish, so the high of the range stays. And now we are looking, now we know the high of the range. Okay, now we have the add. As I was telling you, the setting of the chart at the beginning takes time, But later on, I spend between 2 to 5 hours working on 27 pairs. Why 27, not 28? Because the demo with the broker that I'm with, there is something wrong with the AUD USD and they did not fix it. And I don't want to waste my time looking for another broker now. So at the beginning, it takes time to set up the chart, but then it becomes just a couple of minutes for each pair, unless there is work to be done, identifying POIs and all that. When there is a trade, if there is something happening with the chart, that it will take about 10 to 15 minutes on the chart. But then when you finish, you move to the next one. So it takes about 2 hours to 5 hours to finish all the pairs for me, the measures and the crosses. Now we want to look for a low of the range. So now the first pullback is this one for this low. Okay. Let's set it clearly. Okay, so this is 25.67.8. 67.8. Okay, so we go. This will not be a low. Let's take this out. This will not be a low unless the inducement is hit. Okay, because if another low happened, we will take this inducement and look for a pullback on the new low. And this will not be a break, will not be considered as a break of structure. Okay, so let's see if the inducement, let's see if the inducement is broken. 550. Yes, it has been hit, and this becomes the low of the range. As we previously noted, this was actually the low of the range, and that was the high. Okay, this is what we originally said at the beginning, but we wanted to make sure that everything is correct for the explanation. So the low is 25057 057. Okay, 058 0587. Okay, so now, did any of these hit? Yes, this one hit. So what I do is I go here and I reduce this and I give it a label, but now we will not do that because there are no templates here. The text will be, this is a break of structure, BOS I will call it. Okay, now this is a break of structure. With this break of structure, now the high, because it's a break of structure, this is not a change of character, we have a new high, which is the retracement from this part to this part. How deep was the retracement? It becomes the deepest retracement, becomes the new high here. And we will be looking for a low. So the high is 25.69. So this is the new high. And we will take this. This is too long. Okay, to 450. And now we will be looking for, so has this been hit? So this is the 25, the low is 25.052. This is 0.54. This is 0.53. So this low is is only hit by this one. So this is the lowest point. What we want now is to find the nearest, the latest pullback from this low. Okay, so we have an evident one here. Okay, do we have somewhere something closer? Well, okay, let's look at these candles. This from a glimpse, it looks like this is a pullback, but they're all engulfed in this. So these are not, this is not a valid pullback because they're all engulfed in this candle. Okay, so and this is a pullback, but not for a lower low than this. Okay, so this becomes the inducement, and in this case, since now this is the case, since this happened, this inducement is lying before the break, so this becomes a minor inducement and this is a major inducement. Okay, once the inducement, if this has been hit, then this range belongs to a minor inducement, and in this case, I personally don't trade on this range. Okay, I wait for the next range. I only trade on major inducement. Okay, so let's now move the price. It's too slow. Okay, let's put that here. And let's increase this here. Wait. No, not yet. Okay. Okay, let's put that at 600. Okay, so we have a newer low, but the inducement wasn't hit. So we take this and we look for the most recent inducement. Now the inducement is major. Okay. So now the inducement is major. We look, this is 25.33.9. Is there another pullback? No, there isn't. 25.33.9. Okay. Remember, this is the high of the range. Let's put it forward at 650. Okay. So this is the high of the range. What we need to identify is the low of the range. Okay. So do we have a pullback? We have a pullback here. We have a pullback here. Okay. So this is the most recent pullback. The high is 24.91.6. Let's move. Okay, there is another pullback here because it is broken. It's breaking the lows of the lows, okay, without touching the inducement. So we have no break of structure yet, and there is no range until low of the range until now. What we're trying to do is identify that part by understanding. Wait. So we have a pullback here. We have a pullback here. Do we have another pullback? No, this is the most recent pullback. Okay. It's starting to go up. So let's have it 24. Exactly 24. 0, 0, 0. No. Ah, the height. I'm looking for the height. Sorry. 24.11.1. Okay, let's continue with the price. So now this is the lowest low, and this is the inducement because this is the most recent pullback. There is no other pullback to this low. So we have two scenarios. Either the inducement is hit and this becomes the low of the range, and if it was broken, it becomes a break of structure, or we have another low without touching the inducement, and therefore we will be moving the inducement until it is hit. So now we are waiting for, it seems that it will hit. Yes, it got hit, and this becomes the low of the range, and this low is 23.52.1. And this is the low of the range. So the range now is this. Okay, let's see if we can catch the whole move. Okay, this is the range. This is the high of the range. This is the low of the range, and we have a major inducement. So now we are ready to identify the points of interest, the POIs, which means, well, this is the first POI. Actually, the inducement is the first POI. And our POIs depend on the liquidity. So if the inducement is the first POI where there is a liquidity lying above it, that means this might actually, and it's starting to show that it took the liquidity and it will go down. So basically, this is what we want to talk about in our next video. What are the POIs, which means the points of interest of this methodology? What are the areas of liquidity within the range? Now, the external range and the external high and low are also liquidity areas, but we are going to look at liquidity areas within the range. Now, the methodology, the original methodology, talks about order flows, order blocks, engineering liquidity, and the inducement. For me, I only look, and there are two types of order flows and order blocks. The extreme one, and I will show you now, and let's see, say it's an introduction. The extreme one, if the order flow or order block happens here, okay, now what are we? Let me go back in the explanation a little bit. Now, the concept says that because this is the range, it's very similar to Fibonacci. Where is the retracement going and to which depth before it reflects and continues its way downward? This is the assumption. This is the methodology. This is what all this is all about. Identifying where the price will reflect and continue its downward movement. If it went up and touched this high, that means it's a change of character, change of sentiment, and we are looking now at other POIs which are buying POIs. Now, because we are in a downward trend, we will be looking for selling POIs or points of interest. Order blocks, order flows, engineering liquidity is the one in the original methodology. For me, yes, I was talking about the two types of order blocks and order flows, which are one, okay, the original methodology looks at order flows first. If there are no unmitigated order flows, it looks at order blocks, okay? Order blocks that are not mitigated, okay? This is the original methodology. And it looks at two. One is called extreme, which is near the top, in this case because it's downward trending. Again, we are looking for areas where it would reflect. So this is the inducement. It could reflect from here, or it could reflect from an order flow at the top, or an order flow in the middle, which is the decisional order flow, or a decisional order block. Now, if this fails, that means we look for, if the inducement fails, we look at the next opportunity, which is, let's say, a decisional order flow. If it fails, then we will look at the engineering liquidity. If that fails, we will be looking at the extreme order flow. Okay? For me, I don't go, in my methodology, I don't go through all this, the if scenarios. If they fail, we'll go to the next step. I only take the extreme, either order flow or order block, and in some cases, the rejection zone or rejection block. Okay? So these point of interest we will be talking about in more details and showing them in the future video or videos. Thank you very much and see you then. Bye bye.